Hi, I'm Mary Kopczynski, the CEO of RegAlytics. Welcome to this week's regulatory roundup hosted from another undisclosed location during my vacation. You already have some good hints from the last roundup, so we'll see in the comments if you can guess where I am now. I've switched to a quieter venue because it's just too exciting out on the lake. This week, there were 1,259 alerts from 316 unique U.S. regulators, and 339 had to do with coronavirus. The regulator of the week are the joint banking agencies. The FDIC, the Fed, the NCUA, and the OCC issued a joint statement about how they are going to enforce the rules around the Bank Secrecy Act and the anti-money laundering regime. They clarified the times where they would issue an emergency cease and desist order, but they also clarified when they would take less formal actions. A few months before coronavirus hit, I had noticed a number of state alerts popping up about 5G, broadband, and other infrastructure efforts. Over the last few weeks, as states have grappled with the return to school and online teaching, alerts related to these topics started cropping up in a new buzz phrase called digital divide. In the weekly address of Arkansas's governor, he talked about the importance of expanding broadband in light of COVID-19, not only for school, but also for telehealth. Missouri announced 16 broadband projects from 8 different broadband providers. They're going to receive more than $3 million through the state's emergency broadband investment programs, which is going to connect 2,000 Missouri households. In that alert, the governor gave a little bit of the background that they're actually using $50 million of their CARES Act funding to create a rapid broadband deployment initiative. California announced that every eligible local educational agency has already applied for and is going to be receiving a portion of the $5.3 billion in learning loss mitigation funds that the state announced in their budget last June. He then signed an executive order directing state agencies to bridge the digital divide. For those of you following cannabis, the South Dakota Department of Agriculture submitted its plan to the USDA to regulate industrial hemp in South Dakota and is awaiting final approval. Illinois passed final rules on how to resolve a tie-breaking process for the limited number of dispensary licenses in the state. For those of you following climate-related alerts, Virginia has approved a company to invest $17 million to establish a new commercial hydroponic greenhouse operation that is going to produce 28 times the amount of leafy greens per acre than a traditional growing operation, and it will be the 5th of its kind in the United States. The Colorado Department of Insurance gave some tips to people about handling storms based on the finding by Colorado Climate Center that Colorado saw the state's first recorded derecho. What is a derecho, you may ask? I had no idea either, but I looked it up and it's apparently a really big storm. California's governor signed a heat emergency proclamation to free up energy capacity there. The EPA formally announced that it has rescinded methane emissions regulations over the oil and gas industry. A number of states are not pleased. And finally, New York State is launching a pilot program to detect COVID-19 in wastewater. For those of you following crypto, the Federal Reserve Board's Technology Lab is expanding experimentation with digital currencies and other payment innovations. The Fed released a paper exploring the potential benefit of a central bank digital currency and considered whether central banks should offer a digital version of cash. The SEC busted a $5 million ICO for being unregistered. In addition to having to give the $5 million back to the investors, the founders are permanently shut down and need to pay over $700,000 in fines. The Texas State Security Board shut down a set of South African firms for fraudulently recruiting Austin residents to participate in a cryptocurrency credit card scheme. The IRS and the Department of Justice dismantled 3 terrorist financing cyber-enabled campaigns in D.C. It represents the government's largest ever seizure of cryptocurrency in the terrorism context. The Washington State Department of Financial Institutions shut down Bitworld FX, a purported Forex trading platform that posed as a fake Washington State company, including posting a fake certificate of incorporation. In our Find Tracker this week, a Fresno, California-based investment advisory firm was busted for not disclosing revenue they were receiving from customers' purchases. The Federal Trade Commission is mailing checks and sending PayPal payments totaling more than $9.1 million to customers who paid for an Amazing Wealth System workshop. You pay for the workshop to, of course, become rich by selling things on Amazon.com, but most of the consumers actually ended up losing a significant amount of money and ultimately lost their ability to sell on Amazon.com because of the fraud. A former banker and mortgage broker was sent to prison for defrauding a big California bank, along with his stepmother, who was a part of the illegal wiring scheme. The FDIC busted a project manager employed by a major retailer, I don't know which one, for filing fraudulent bank loan applications seeking more than $8 million in PPP loans. And not financial, but certainly interesting, New York State has shut down, as of this week, 115 bars for egregious violations of the social distancing rules. For those of you following privacy, North Dakota issued a new Care19 smartphone app that is going to help track coronavirus exposure. They were actually the first state to launch a contact tracing app, but now they're the first one where their app coordinates with other apps in other states. For those of you following social justice, New York established the State Police Reform and Reinvention Collaborative, and last week the governor issued guidance offering a framework for local police departments, elected officials, and citizens as they develop their plans for reform. Per the governor's executive order, every locality must adopt a plan for reform to be eligible for state funding. Colorado's Supreme Court issued a ruling last week that further strengthens Colorado's Anti-Discrimination Act, which is good news for the LGBTQ community. North Dakota's Department of Corrections and Rehabilitation announced a new public-facing website designed to answer basic questions about statistics that citizens might have about corrections and rehabilitation in the state. Delaware has banned the use of chokeholds by law enforcement. Ohio's Department of Aging created a minority strike force to improve minority health during COVID-19. The group issued a blueprint with 34 recommendations to dismantle racism in Ohio's health system. The stats are interesting because currently African Americans represent 14% of Ohio's population and Latinos are under 4%. But when it comes to COVID deaths and hospitalizations, they're clocking in at about 30% of positive cases. For those of you watching SROs, ICE created a new board member role for Miss Carolyn Silver. This, of course, got me on my curiosity radar, and I looked, and ICE's board is actually reasonably diverse for this day and age, so good job, ICE. In other federal news, the FTC issued 20 more warning letters to companies with unproven COVID-19 claims. And the end of an era. Goodbye, OATS, and hello, cat. FINRA issued the official proposed rule change to delete the FINRA order audit trail system. Wow. Robert Benedict Bowes has been submitted to Congress as a new CFTC commissioner. Also, Carolyn Crenshaw and Hester Pierce were sworn in as SEC commissioners. Those of you who know I'm obsessed with Hester Pierce, this makes me very happy. The IRS now has electronic filing available for IRS Form 1040X in this new digital world. GE Healthcare applied to be registered as an importer of cocaine. Yes, you heard that right. I have no idea if that's normal, but it did catch my eye that a company is even allowed to import cocaine legally. Interesting, right? You've probably seen news on TikTok and the White House efforts to ban it. I found it very interesting this week that Nebraska's governor has banned TikTok apps on all state electronic devices for security concerns. In state news, New York is finally opening up bowling and museums and gyms and fitness centers at 50%. Also, New York is going after one of the nation's largest egg producers for price gouging. In Hawaii, in addition to a 2-week mandatory quarantine on arrival, you're not allowed to rent a car there or take any sort of ride share. In short, don't go to Hawaii. They don't want you there. Wisconsin and Nevada both issued statements on the depressing news that they've hit the over 1,000 death milestone. This one cracked me up. The Rhode Island Department of Health, due to exceptionally high call volume, is going to solve this problem by closing the call center 30 minutes early so that people on hold get helped by the end of the day. Indiana is warning homeowners about storm chasers. Kind of like ambulance chasers, it's people telling you to pay in advance to reserve for them to come fix your house first after a major storm. A lot of them are frauds. That's it this week for RegAlytics US Alerts. Join us every Wednesday morning on LinkedIn, and for the longer version, go to YouTube.